Bloomberg Audio Studios. Podcasts, radio, news. You're listening to the Bloomberg Intelligence Podcast. Catch us live weekdays at 10 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts or watch us live on YouTube.
All right, let's get to the broader market here. You're taking a look at Treasuries, still having a little sell-off here. Yields really pushing higher. The question is why? Is it just purely just a risk-on trade and then risk-off in Treasuries? Let's get more with Ira Jersey, Bloomberg Intelligence Chief U.S. Interest Rate Strategist, joining us. Ira, when you look at a move like this, is this a purely, hey, tariffs might not be as bad, we're buying equities, we're selling bonds?
Yeah, I think it's as simple as that, Alex, at least this morning. The headline, certainly, of the S&P Global PMIs also didn't hurt any either. You saw a little bit of a move after that with yields moving up a basis point or two. But generally, it's the risk-on sentiment right now. And, we've been talking about the entire year. We're going to have this play between, look, are we going into a recession anytime soon? Or is the economy going to hang on just enough that the Federal Reserve is going to be reluctant to cut interest rates because, the services sector is doing okay, plus tariffs might increase inflation expectations. So the market just hovering around this, low 4% range for the 10-year yield is probably something that we're going to continue to see for quite a long time.
We're going to get some inflation data at the end of this week. Ira, how do you think the Fed's looking at this core PCE data that we'll get on Friday?
Well, they like the core PCE data, but usually, and in the recent past, the forecasters have done a pretty good job in determining where it's going to be, at least within 0.1%. So I suspect that the market, if there's a big surprise, obviously the market will move. But I think we'll move beyond that and think about next week's non-farm payroll report and some of the other PMI reports that we get from the U.S., from the Institute of Supply Management next week. Those tend to be the bigger movers, right? And the jobs market still is the key, with certainly CPI inflation being number two. Interestingly, when you look at what the 10-year yield has been most sensitive to in terms of changes when data points miss, it's always payrolls number one. CPI has been number two, but this PCE deflator is all the way down at number 7 right now in our list of the top 10. So that's fallen off quite a bit. Retail sales, on the other hand, that's now number 3. That had been number 2 for a long time. But those 3 are really the data points that you want to focus in on. That's certainly, when you see any shifts there, that's when you're going to see big moves in the Treasury market.
And we get some auctions this week as well, really in the belly of the curve. You had mentioned earlier last week that the 10-year had kind of found its high, but we're looking for a bottom. But what does that mean then for the belly?
Yeah, so we get 2s, 5s, and 7s. So those 5s and 7s is distinctly the belly. I actually think that tomorrow's 2-year auction will be maybe the most well bid this year of this week's auctions, in part because the break even and the risk factors that you can get at a 4% 2-year yield means that basically yields have to double over the next year for people to start losing money. So if you're an investor, even whether you're benchmarked to some index or you just want to hide somewhere, the 2-year I think will still get pretty good demand. But those 5s and 7s are the question, Alex, and I think that they'll probably do okay. And I'm basing that on the fact that last week's 20-year and the 20-year auctions have not gone particularly well in general over the last couple of years. But last week it was very strong auction, was one of the strongest 20-year auctions that we've actually had since that point was reintroduced. And so I do think that 5s and 7s this week will probably go okay, particularly if they cheapen up a little bit here over the next 48 hours.
Have you totally tuned out at this moment because we're talking about auctions?
Yes.
Sweet.
I did.
Awesome.
Absolutely.
I feel you, Ira.
But I'm ready to follow up here. What's the soccer match we got to focus on in the next couple of days here, Ira?
Oh, well, I'm still depressed that the United States came in 4th in the Nations League over the weekend, losing to both Panama and Canada in the consolation game. So, ask me later this week, and I'll let you know.
He got him off his game. All right, Ira, thank you so much. We appreciate it. Ira Jersey, Chief U.S. Interest Rate Strategist, Chief International Soccer Strategist for Bloomberg Intelligence. He wears 2 hats there.
You're listening to the Bloomberg Intelligence Podcast. Catch us live weekdays at 10 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts or watch us live on YouTube.
Alix Steele here alongside Paul Sweeney. This is Bloomberg Intelligence Radio. Happy rainy Monday in New York. We're broadcasting live from our interactive broker studio right here in Midtown Manhattan. Also check us out on YouTube as well. All right, let's get a check-in on the markets. We're obviously seeing a relief rally here. It's definitely a risk-on kind of day. Does it last? What do you do with it? Dana Dioria is Co-Chief Investment Officer at Envestnet, joining us now from Hartford. Dana, is this the kind of day that you sell into rallies, or do you feel like, all right, things are going to go well?
Well, I mean, you know, the obviously the correction that preceded all of this was a lot more sentiment driven, I think, than fundamentals driven. And so, you know, if you're going to be trading on any of these moves in the market, you know, any of the, hey, now we're going to have a lot of tariffs. No, actually, we're cutting back. It's going to be the dirty 15. It's not going to be everybody, et cetera. Then, yeah, this is probably a buying moment. I think for the average person, you know, and the average investor, it's more about what are the fundamentals here? Do we actually think, you know, the kind of the tariff tantrum that we're going through and have been going through and will continue to, you know, in spite of a little bit of positive news on that front, you know, is that something that's going to ultimately lead to broader concerns in the market? And, you know, look, corrections 3/4 of the time don't lead to recessions. But, you know, a lot of it depends on what news is yet to come.
For a world where there is some level of uncertainty, maybe greater than average, is it a way you construct your portfolio? Is it how you allocate your assets, or do you just buy quality and I guess hope for the best?
Yeah, so I mean, look, there's a lot of different ways you can kind of come at this. Certainly, and we sit, you know, Envestnet sits at the junction of a lot of managers, a lot of research services. I mean, certainly you're hearing a lot more international speak. You know, I came into this year, I'll be honest with you, we do these chief investment officer panels everywhere. And the idea of US dominance was just, you know, very much a theme at these panels. And, you know, look, markets are cyclical. And certainly the US markets had much higher valuations than international markets. I think you're seeing some repricing of that now. But, you know, the tone has shifted, right? And you're hearing more around, well, hey, maybe international diversification is a good idea in portfolios. We would say that's a long run secular asset allocation need, you know, for most people, right? Unless you're completely focused on US indexes and can't handle the tracking error, we would largely say be diversified in international markets anyway. We're certainly hearing more now, even from a news and macro perspective, that looking at international, you know, having diversification away from US makes sense.
And do you have to sell something to then buy, or is this like, hey, I had some cash, I'm going to deploy?
Well, you know, that's a great question, because of course we've been living in the last few years with this massive amount of money sitting in cash. And while it's great, you know, we're past these years of financial repression for just savers. We all know that, you know, that kind of the traditional wisdom is, unless it's money you need in the next 3 years, it's probably better served than sitting in cash. So there are certainly people with money on the sidelines who they've missed, you know, a whopping 20+% 2 years in a row from the S&P, for example. And as we all know, you know, it's time in the market, right? If you're missing those big months, years, et cetera, it's really hard to make that back up when you look at the average that you accumulate over time. So look, if you have long run money sitting in cash, for sure, we would say that into a balanced portfolio. But the other side of the coin is you've also got a lot of people who leaned into stocks, right? Very pro-growth optimism that we started the year, you know, obviously big run up, especially driven by growth. And so you have people who are overweight equities. And if you're overweight equities relative to your risk tolerance and what you can handle, you know, you should be thinking about harvesting from the equity position if you're doing more equity. And you should also be thinking about getting more into fixed income.
Well, in your notes, you've got Bitcoin is no gold. So let me get your thoughts on Bitcoin.
Yeah, you know, Bitcoin is 100% from my perspective a risk-on speculative asset. We read and, you know, you're seeing headlines obviously now comparing kind of the performance of Bitcoin and gold. Are these places to kind of hide out? Say again?
Nope.
No, go ahead.
Keep going.
Yeah, so look, are these places to hide out? And we would just very much point out that they are massively different. When people think about a Bitcoin investment, they're not thinking about it A, as a currency, or B, as, certainly, there's an argument that this is another form, it's digital gold. But from the standpoint of the volatility of these assets, there's no comparison. And when you're thinking about Bitcoin, it's really kind of more this asymmetric payoff, the potential for sort of like a lotto-like return. If you want that, that's fine. But thinking that it looks like gold and is going to be a safe haven asset, I think doesn't work.
Okay, so that kind of lined me up for the safe haven part. So all this taking into effect, what's like your best safe haven trade right now?
Certainly fixed income. The standard place to have ballast in the portfolio, I think, makes a lot of sense still. But if you're talking about within equity markets, you started off there, actually, you mentioned quality. There's a couple different ways to go after quality. You can do, traditional quality as a fundamental indicator. You're looking for stocks that, or frankly, ETFs or mutual funds with a bevy of stocks that have high quality earnings, right? So high profitability, not the need to reinvest, plow a lot of money back in, and also probably, cash-based earnings more than accrual-based earnings. So that's one indicator. Another is more a technical indicator, of course, which is just what is the volatility of that stock? And you've got a lot of ways to make that play too. The traditional defensive sort of, you can pick low volatility stocks, or you can pick kind of minimum variance where, the stock itself maybe is not the lowest volatility, but it doesn't correlate well with the rest of the market. So it adds sort of padding to the rest of the portfolio.
That's a really good point. All right, Dana, thanks a lot. We really appreciate it. Dana Dioria, Co-Chief Investment Officer at Envestnet, joining us on the markets.
You're listening to the Bloomberg Intelligence Podcast. Catch us live weekdays at 10 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts, or watch us live on YouTube.
The other wild card within the Trump administration is how the talks unfold when it comes to peace between Russia and Ukraine. Apparently, U.S. and Russian officials are meeting in Saudi Arabia to discuss a potential ceasefire in the war. And this, of course, follows talks between the American and Ukrainian teams. Joining us now is Roz Matheson, Bloomberg News Director for Europe, the Middle East, and Africa. Roz, what do you know in terms of where the talks are?
Well, as you were saying, we had talks initially between the US and Ukraine officials in Saudi Arabia. Now we've got talks that have been going on today between the US and Russia, and they seem to be really granular and quite technical in nature, focused on some specifics around perhaps getting agreement for ceasefire on maritime traffic in the Black Sea. For example, we're not getting a lot of readouts at the moment from those conversations, so they seem to have gone into a bit of a quiet phase on it, at least with each other. But the sense is they're going bit by bit in this idea of a ceasefire in Ukraine. We had that conversation initially around a ceasefire for not hitting each other's energy infrastructure, even though attacks seemingly are still going on in the minute. And now we've got conversations around how to get guarantees around traffic, maritime traffic in the Black Sea. But the big one, of course, is what to do where people are actually fighting along the line of contact, which is a very long line on the side of Ukraine, and what to do there in terms of bringing the fighting to a halt. There doesn't seem to be any particular developments on that front so far. So the message really that we're getting is that even though the US president clearly wants a very quick ceasefire here, that there's a lot of steps that need to happen and a lot of complexity along the way.
And Roz, as you point out, the U.S. administration certainly hopes for a Ukraine peace deal, but it doesn't seem like Vladimir Putin is in any hurry here. What do we know about his thinking?
Well, that's right. I mean, obviously, he's willing to have conversations and perhaps even a direct meeting with the US president, with Donald Trump at some point in the near future, perhaps in a place like Saudi Arabia again. But he's made it really clear, and that's by our own reporting and our own sourcing as well, is that he's got maximalist demands here and he's not going to shave those down in any great hurry. These are things that he says that he insists need to happen for there to be a ceasefire moving towards a more permanent deal. And those are essentially red lines that are not that great for Ukraine in all of this, in terms of his territorial demands to make sure that Ukraine can never join NATO, for example, to really, fence Ukraine in, and whether those are just demands that he gets traction on with Donald Trump and the US in the end, that are detrimental to Ukraine. So he's not in any great hurry here to get to a ceasefire, final deal. He's obviously open to talking, but the position from Russia has been very clear. They've got demands and they want them met.
What about Europe? Where's Europe right now during these conversations?
Still trying to get in the door, it seems, in the conversation in a fulsome way, at least. I mean, obviously, we've had a lot of meetings that have gone on just at the EU level lately, including last week, and EU leaders are having another call. This week, we know that, again, the UK Prime Minister, talked with Donald Trump yet again. So a lot of conversations going on, and the message from Europe is we need to be part of the discussion around a ceasefire, and Ukraine's interests need to be represented. But it's very clear that they're struggling to get a seat at the table, and that Donald Trump is not particularly interested in giving them one at the table, let alone giving Ukraine a proper seat at the table. And so for Europe, the challenge is getting their voices heard, or showing that they're there and able to pick up some of the slack potentially in supporting Ukraine.
Roz, is there any sense of timing when this could come together? Is there any consensus building out there?
Well, it's very hard to say because, again, these talks that are going on at the moment seem to have been very technical in nature and very specific around details. So are we getting the little pieces of the chessboard towards a bigger ceasefire at some point? I imagine the key thing is whether there's an agreement to have further rounds of talks within a matter of days, or at least towards the end of this week. And at what point can that build to a direct meeting between Vladimir Putin and Donald Trump, possibly as soon as next month? I mean, obviously, Donald Trump keeps saying Easter as a timeline. He wants something by Easter, but what exactly he would be happy to get by Easter? Is it a partial ceasefire, again, around energy, or perhaps maritime traffic in the Black Sea as a springboard to something else? So we're unlikely to get a full-throated ceasefire either way, at least in the next couple of weeks.
All right, Roz, thanks a lot. We really appreciate it. Roz Matheson joining us on the talks between Russia and the U.S. on Ukraine. All right, some breaking news for you. Xiaomi is said to raise about $5.5 billion in upsized share placement. They were selling about 800 million shares. Now, Xiaomi was kicking off a share sale in part to raise funds for its EV business. The fundraising expected to be a long-term positive for the company, but many saying that it may pressure shares in the short term due to, shocker, dilution.
And the stock is up 65% year to date and 285% on a trailing 12-month basis. Even I know that's a good time to sell stock.
There it is. And they take your point. All right, coming up, RJ Gallo, Senior Portfolio Manager, Fixed Income at Federate Hermes, will be joining us. On the fixed income space, we get 2 5s and 10s later on this week. A lot of supply coming online there.
You're listening to the Bloomberg Intelligence Podcast. Catch us live weekdays at 10 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts, or watch us live on YouTube.
Let's switch over to the EV business. Interesting story out there that's really been rocking, I think, the EV business. That's BYD, saying they're going to have a 5-minute charging system. That is a game changer, if that is in fact the case. Let's check in with the BNEF folks here. BNEF, they cover all the energy industry head to toe. Alix is beat, but they've got all the data, all the analysis. Great stuff. Ryan Fisher joins us, Bloomberg BNEF EV charging team leader. So, Ryan, talk to us about this BYD story as it relates to this fast charger.
Yeah, I mean, this has just come out of nowhere in some ways. We had the Porsches of this world doing charging 350 kilowatt. This is 1,000 kilowatt. We've got 3 to 4 times the kind of other best in class that people were expecting. When we talk about 5 minutes, obviously that's similar to gasoline for 400 kilometers of charge. Some of the others are more like the best in class Lucid, obviously is quite famous. They're doing it in like 100, maybe 180 kilometers in that time. So this is a real step change. And not only is it that, what you've got is an announcement, and they're going to make the vehicles available a month later. So typically you might hear an announcement from a Western automaker, and maybe a couple of years later that tech you've heard about will be there, whereas they're saying these vehicles in China, you'll be able to buy them soon. But yeah, that is only in China.
How did they get it down to 5 minutes?
So it seems like they've improved the fast charging technology through both the voltage. So you have higher voltage on the vehicles. You could lower the current or more the current to accept this power, and then changing the battery chemistry as well. So the interesting thing is that they've added different types of cooling, because if you have really high currents going through the battery, then you have a lot of heat being created. So they've changed their cooling technology. They've improved some of the other intricacies of the cells as well. And on a bigger market point, you've got a lot of companies saying we're going to build solid state batteries, so like next generation battery technologies for the car. Well, is that even needed anymore if BYD can do this with an evolution of the current tech?
So what likely will be the competitive response from the Western battery infrastructure people? They got to up their game like now, don't they?
Yeah, it's just such a race. Like, you look at these EVs and you think about buying one, and there's just something new coming that's more advanced, one after the other. So like, as a consumer, maybe you don't want to buy because you think, well, I'm going to buy something and it'll be obsolete pretty quick. From the Western automakers, they're going to find it hard. You look at BYD, they've just got so many engineers. They're vertically integrated. They're doing much of this by themselves, all the way down to like now buying the ships to distribute these cars they've built around the world, and getting involved in the metals and mining game and things like that. So it's hard to imagine how everybody is going to compete. Obviously, we've got tariffs in different regions to try and block the Chinese out. And then when you think about this tech, there is an element of, do you actually need it? So when you look on the Chinese articles, they were looking at the Xiaomi SU7, which is the vehicle made by the Xiaomi, which is the smartphone maker. So they've entered the market and they're selling electric vehicles in the hundreds of thousands of volume. They've outsold loads of cars. It's kind of an amazing story. And people comparing, saying, well, actually, this one BYD is talking about is $10,000 more expensive. So like the tech is not necessarily everything on fast charging, when there's people who are doing I don't know, fast cars, fancy cars. They got a lot of other features as well. Like, whilst this is a step change, do we necessarily need 5 minutes over 10 minutes? Does everybody care? It's debatable.
I mean, it depends how long your bathroom break is, which, you got to shop, you got to get some concessions. Okay, we also had the headline that BYD is outselling Teslas in China in particular. You can't get a BYD car in the US, I should point that out. And the BYD sales for this year, about 5 to 6 million cars. So is this 5-minute battery like a big selling point for this in comparison to, say, a Tesla, or no?
Yeah, I think so. And then in China, what you've got is, I think last year BYD sold something like 1.6 million pure battery electric vehicles. Just the battery powers the car. And I think Tesla was somewhere around 600,000 to 700,000. So it gives you, and they were second. So it gives you an idea. Tesla doing well, but obviously just how well BYD are doing. One of the things BYD had been leaning into previously with these plug-in hybrid models. So you have an engine and you have a battery. The engine might only be small, and the car itself might be mainly running off the battery. So they've done quite well with those, and it might just show a little bit of a pivot from them to say, actually, we can maybe do without the engine now. Look, we've got this huge range, huge range, fast charging power vehicles. Like, you don't necessarily need to worry about that also. It might be a pivot from them. In terms of Tesla versus BYD, when you said that they're not available in the US, but they are available in other regions. So they've done very well in places like Brazil and Thailand. There's something like 80-90% share of the EV market there. And like 80-90% share is obviously huge so that's Chinese manufacturers, of which BYD is a pretty major one. They got a plant out in Brazil as well. So they're making moves to kind of dominate those. The charging tech could be part of that too. So the interesting thing is, like, we've had these like charging connector wars. Do you have the Tesla connector? Do you have the connector that all the other manufacturers are using? And in Europe, all the other manufacturers won out. In America, Tesla won out. Well, arguably in some of these kind of small emerging markets, that you could end up with the Chinese connector becoming an interesting proposition, and maybe the Chinese automotive industry will think about that. And it doesn't mean that they've got it so far, but if they're selling the most cars and they've got the most advanced charging tech, then maybe that's a way that they can exert more influence over the rest of the world.
All right, Ryan, really appreciate it. Ryan Fisher is EV charging team leader. That basically means he heads up all the coverage when it comes to EV charging at Bloomberg BNEF. And as Paul was saying earlier, Bloomberg NEF covers pretty much everything: commodities, power, transport, industry, buildings, and ag sectors, all to help with the energy transition, and some hard data there.
This is the Bloomberg Intelligence Podcast, available on Apple, Spotify, and anywhere else you get your podcasts. Listen live each weekday, 10 a.m. to noon Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.